Today, Greg and myself, Dennis, will be discussing operational numbers versus tax numbers and why that matters. We're going to discuss why your accountant works for the tax man more than they work for you. And it's not intentional. The process is just set up that way. The importance of how to look at your financials, the way to look at your financials, and remarkably, how simple and easy it is to know if you're making profitable decisions or unprofitable decisions without getting lost in all of the accounting lingo.
I'm Dennis.
And I'm Greg.
And this is the More Profit, Less Stress podcast,
where we provide the tools for more profit and less stress in your business now so you can turn into a valuable asset later. Welcome to the More Profit, Less Stress podcast. I'm here with Dennis Tackman, and today we want to get into a really great subject about laying out your profit and loss in an operational way versus a tax way. And actually, for clarity, we say profit and loss a lot. It's the same as an income statement. Those are two words for the same thing. I'll let you share why you think it's good we talk about it.
Well, I think where we get into a lot of confusion in the business world is actually how the numbers are supposed to work. You end up with a lot of definitions that don't mean anything to the vast majority of people. You can talk markup, you can talk margin, you can talk expense ratios, you can talk net profit, net revenue, gross profit, gross revenue, EBIT, EBITDA, all of this stuff. And most business owners that I've ever come across glaze over at the terms, don't actually understand what they mean. And so they go, well, I don't have to process or think about this because my accountant's got it taken care of for me. Right. The challenge with that is your accountant looks at your numbers as a tax professional. Their entire job is your taxation, what you owe, what you don't owe, your tax strategy, your tax planning, all of that stuff around that issue. And that's got almost nothing to do with your operations because the understanding of it's completely different. So when we talk about operational numbers, there's a couple of things that come from it. Number one, it's the battle of percentages. Like a small change in a percentage of something in your business can have a big impact either positively or negatively on how the business does. And number two, it has to be simplicity and understanding. So I should be able to look at it at a glance, know exactly what's happening in my business so I can make a decision about what to do for the next step and the next level. And if I am always waiting on my accountant's financials from the year end, I can never make those decisions proactively. I'm making them reactively, but I'm almost making the decisions after like 2 rounds of boxing and I haven't thrown a punch yet to figure out what to punch. So you need to have everything on time.
Even like when you say accountant, I think it applies. Some people say, "Oh, my bookkeeper has it." It's the same discussion, right? I like. There's a good example to drive maybe this point home. Is I'll say to like a potential client or a business owner, "Okay, you're a parent. You got 2 choices. Option 1: the school phones you and says." So I'm going to sound a little sarcastic here, but the school phones you and says, "Hey, option 1, in your best interest, because you're busy, you got your job or your business or whatever's going on. Your kid goes to our school. We got it taken care of. Don't worry about it. Trust us." And you get a report card in the summer after the year's over, and that's all you get. So the whole year goes by, you get a report card at the end that says like, here's the grades, attendance record, teacher's notes, whatever, but the year's done. And we're going to do that for you because, we got your back. You're a busy parent, why bother? Don't want to distract you and interrupt you. Or option 2, which you're not going to want to do because you're busy, it's a lot of work, which is we'll give you access to a live portal and you can go in anytime you want and look at their grades, their attendance record, their marks on reports, whatever it is. Which one do you want? Every single parent on the planet would want option 2. And then if you ask them why, it's because they want to know what's going on so they can make changes. Like to the point you just made, they can look at numbers, make decisions, adapt, get tutoring, work on a subject, do homework, don't go to the park and play, study, whatever it is. Well, just change the word to business. It's the same subject you're bringing up. Like it's exactly the same subject.
Well, and it's the power of why. Like if I look at my child has now got a low grade in something, I can ask the child, why? Like what's going on? Well, Dad, I just don't get the math, or I just can't seem to focus in English class, or whatever it happens to be. I can solve the why. I can get mad about the what, but getting mad about the what doesn't solve the problem. It just makes me a jerk. So why don't I figure out the why? And if I look at my business financials, it's the same thing. If I see a number that doesn't make any sense, I got to be able to ask why. So let's discuss the separation there for a second. So you're not meant to understand the tax code. That's why you have an accountant who specializes and studies the tax code. Depending on the state you're in.
Time.
Federally, it changes. Statewide, it changes. In Canada, it changes federally. In Canada, it changes provincially. Trying to understand everything about the tax code is a full-time job. That's why accountants have a full-time job. Now, when you look at the tax code, most stuff in the tax code is written in by numbered categories. At least in Canada, things fall into specific numbered categories to make the tax guy's job easier. So with that, they'll lump a bunch of things that feel the same into the same tax number for the sake of tax reporting, not for the sake of operations. So here in Canada, I'll give you an example. There's a category in your tax line for professional fees. Well, professional fees include lawyer.
I was just thinking the same example.
They include accountant. They include a business coach. They include a marketing company if it's a contracted company. You can have 5, 6, 7, 10 things lumped into professional fees, and I get my profit and loss back, and it says, Dennis, you spent $250,000 on professional fees. I go, okay, well, that sucks. I guess I get to expense all of that. But how do I make a decision to reduce that category if I don't know what's in it?
Yeah.
Maybe I overpaid on my lawyer that's there that year, and I'm not going to have him again the next year, so I can adjust my profit and loss if I know that. If it's one lump sum category, I can't. And the other category in the tax world that frustrates me is the one called miscellaneous. Whatever they can't figure out where it goes gets slapped in that miscellaneous. Well, if miscellaneous is 30, 40, 50 grand, I can't just cut out miscellaneous from my operations because I don't know what's in it. So how do I make decisions when it's designed for taxes and not operations? So we've flipped the whole script. Everything we do with the client is going, okay, your accountant's your accountant. I've got no problem with the guy, great person. But how do we look at your numbers as an actual operator of a business, as an actual report card for a business, so we know, okay, I might increase my revenue, but does increasing my revenue just make me broke at a higher level? Or do I increase my revenue because the impact of increasing that revenue is going to 2 to 3 times my net profit? You can't make those decisions off a tax report.
Yeah, exactly. And probably like we always say, the 95% of businesses fail, which is crazy because 10 years ago or 15 years ago when we were sharing that information, it was always 80 plus. That number now is 95. That number is getting worse. In the last 2 decades, the number is getting worse. That's not a good thing. And this discussion we're having is part of the reason.
Well, but what I find funny, and this is a bit of a side tangent, but business coaching has also never been more prolific in the marketplace than it is now. So if business coaching is massively prolific and it's everywhere, I can't think of very many people in business who haven't had exposure to business coaching in some form or another. You would think that failure rate would be dropping drastically if all of these people that are coaching businesses are experts at it. It should not be going the other way.
Yeah, absolutely right. Like we always talk about, I think the number one reason, there are a number of reasons businesses fail. One big one would be your product or service is really bad. Obviously, that's going to be a problem. Customer doesn't want it. So that's a big one. But the other big one is the main reason we talk about laying out the financials differently, like you were saying, and it's not knowing how to price your product or service properly. So that's like literally the first thing we do with clients is like, so here's a great story. Brand new client just started as we're doing this podcast, and we're his 5th coaching company. 5th. And he was super hesitant starting because of his experience. So he said, okay, well, I'll agree to like the first month, meaning I don't really want to sign up for the ongoing program because it was his way of saying, I don't trust you. Yeah. So he goes, after the first session, which I'll come back to in a second, he goes, wow, you're the 5th coaching company. He goes, the other 4, all they would do is meet me and then say, hey, go buy this book and read it. And then he used a lot of other type of language. But he's like, he's like, I got a wall full of new books that have never been opened and I'm still losing money. Like he's losing money and that's not okay. It's not right. And I know you and I both have the same opinion on that. Like, let's be honest, like these people are actually kind of stealing from him, right? If they're making his situation worse and they're charging for it, that's kind of theft. So going back to the point of pricing's number one, like the very first month we get into that with clients and rearrange, to the point of this podcast, rearrange their financials to put what properly should go into cost of goods. Now, people are going to say, oh, well, I'm a service company, so I don't have a cost of goods, which is exactly what he said in the first meeting. I'm like, that's not true because you sell this service. And when you sell that service, so I'm not going to use his company as an example, but like we've dealt with lots of trades and clinics and a law firm or accounting firm or whatever it is. They sell the service. Well, they're buying an hour from the people that work for them or from a subtrade, and they're selling that to their customer. that hour they're buying, that billable hour, is the cost of goods. So you and I help them figure out how to rearrange to put that in there. And if we apply all those proper cost of goods, then we actually know what the operating expense is. And if you kind of think about the definition of operating expense, it means the expenses I incur to operate my company so that I can buy that cost of goods and sell it to my customer. Now, if we're talking about shoes, that's easy. Like, oh, the shoes is the cost of goods. What I sell to the customer is a revenue. Makes sense. But when you're in a service business, what's the cost of goods? And you and I dive into that. And we have tools for that and a way to methodically rip that apart and categorize it properly so that we know what the true operating expenses are. And a billable hour is not an operating expense. And if we do that, then we can actually help the client calculate, like, if that's the revenue the customer's paying, and this is the cost of goods. So whatever the billable hour you're paying your staff or the pair of shoes you're buying, then a portion of it goes to operating expenses. We have to have some left. So that's gross margin. We got to have some left for profit. So we walk them through with tools our pricing tool prices stuff to the penny, right? It's like to the penny, to the fucking penny.
And I haven't been able to find an AI that's comparable yet because they don't work the same way. Like when I take a look at, for people that are listening to this, to understand this, before you can even get into pricing, you have to understand how your numbers actually look. And that's what Greg's talking about. How am I supposed to, I have a lot of clients who have hit the multiple millions, but they're still eating craft dinner. And people are like, well, how's that possible? If they're doing multiple millions in revenue, how are they eating craft dinner? I'm like, because the revenue number doesn't mean anything. I've got one client in particular, we cut a couple million out of his revenue and he made more money. Well, that doesn't make sense to most people in the market because you cut the thing that's supposed to make you the money. I have another client where we looked at all of his transactions across the board and his average transaction is $9,000. So we looked at $9,000 and we looked at the end of the year on his transactions, he was losing $250,000. So 9,000 per transaction, multiply that by transactions, his final net was negative $250,000. Well, when you break that out by a per transaction basis, simply adjusting the price of his product by $250 breaks that product line to a break even, and suddenly everything else makes him a ton of money. But when we looked at his profit and loss prepared by his accountant and his bookkeeper, who are very competent people, all revenue is treated equal. Yeah. All revenues locked in as being revenue. Then cost of goods falls somewhere in cost of goods sold on that profit and loss and somewhere in expenses because they get mixed up. Then everything else is, I like to call the blah, blah, blahs. And then at the very bottom, you see whether or not it's, do I owe taxes or not? And so then a lot of clients look at that and they go, well, my accountant said I didn't make money. I guess I better go sell more. So this same guy who may have lost $200 per transaction, that to increase that, goes, well, I guess I better go sell more. So we ran that math. We broke it apart in our tool. We ran that math. For him to make up that extra $200 would require a 50% increase in total revenue to make that category a break even with all of the expenses we would have to acquire to chase that revenue to get to that volume. So no matter what he did, that category was going to be backwards for him unless he could do the price change. Yeah. And then figuring out that price change, there were some complications in that because, of course, you've got market volatility, you've got other things that go with it. But understanding what we had to do, we were able to fix that problem. But we could never fix that problem looking at his profit and loss because his profit and loss was done for the accountant, which was done for the government, which was then done for his taxes. They don't care about his operational side of things.
Totally. You're making me realize we should back up a sec here and clarify something. CRA, IRS, whatever country you're living in, or whatever they're called in other English-speaking countries, because I don't know. All they care about is from a tax or bookkeeping, what we're talking about, accountant bookkeeping, a tax perspective, is they care about accounts receivable, so money coming in, they call that revenue, and accounts payable. Accounts receivable minus accounts payable, and you get a number, and I call that profit before depreciation and stuff. But accounts payable, like they're just an accountant or a bookkeeper is saying basically that the government's saying it's all accounts payable. Like it kind of doesn't matter, right? Like Dennis and Greg don't know what they're talking about. It's an accounts payable. It doesn't matter because it gets deducted from accounts receivable, which is revenue. And I get it for taxes, like you're saying, that's the case. But what Dennis and I are trying to say and what you've been bringing up is that accounts payable we want to break that into, like we said earlier, cost of goods and expenses, so you can actually make better business decisions. Back to the school example, like, hey, your overall grade was a C, or that probably dated me. I think in school today it's a number like a 3.2 or whatever. I don't know.
Yeah, whatever it happens to be.
Whatever it looks like now. And they'll say there's the number overall. And it'd be like, okay, well, because that's what's kind of what the government wants, right? Like, what's your overall average? But what we're saying is break it by subject, break it by within subjects, tests and projects and whatever else they grade on, and then figure out where the weakness is and fix that. And that'll bring up the overall grade. That's what we're talking about. And if you don't do that, you can't improve grades. So if you don't do that, you can't improve business.
Well, and I think the fear of anybody listening to this is what we're talking about sounds complicated.
Yeah.
Right.
Mm-hmm.
And I think if
Yep.
you take your current
Yep.
tax paperwork, it is complicated because it takes a lot of investigation and you have to know where things go. But like, just so everybody's aware, I failed math in high school. Like I had to go into the lower grade math to make up for it. And I barely passed that. And I think the only reason I did is because my teacher didn't want me back. He fudged my final number, right? But yet I can understand business financials really simply because when you break it down properly, it's very basic math. It's just understanding why something goes somewhere, what
Yeah.
that actually subtracts from, how that math works out in percentages, and what you're going to do with that information when you have it. So to your point, I might get back a number for overall payroll. So I pay this much money in payroll every month. Well, okay, I guess that's just my overhead and my expense, right? Maybe. But what percentage of that payroll is direct labor cost?
Right.
What percentage of that payroll? So I had one client, we had to break it out between direct labor cost, unbillable time, and hiring agency fees.
Right.
So when we broke all of that down, we found out areas where we were severely overpaying by $20,000 to $30,000 a quarter. Well, we were able to make an adjustment. Now that's a small percentage based on his revenue, but a huge percentage when it gets moved to profit. But we could never make that decision just looking at payroll. We had to break it into the categories to know where the money's going. And then eventually we dove it down even more to find out of the portions that are going to my cost of goods sold, are there areas that I can improve efficiencies on in those particular areas to make that area more profitable? And it's all very basic, simple math. When you have the right tools to do it, you're just putting in the information. It's telling you the result. You take that result and go, I can tweak this. I can tweak that. I can change that. And next thing you know, I can see 1% here, 2% here, 3% here, maybe a small revenue increase there. And next thing you know, my net profit went from I lost money last year to I made 34% at the end of the year. And I'm using that as a real example because I've had clients that have been in the negative and have gone to a positive, and that difference between the negative and a positive is 34%. Not like a 34% increase, but like the difference is a 34% switch based off of revenue. And that's a big, big number off of small decisions.
Totally. This is so, we experience this. That story you just shared, we experience with a lot of clients. And I think I'm listening to that and thinking of, as you're talking about that, I'm picturing a whole bunch of clients that have gone through that exact scenario. And probably in their head, there's a story because to the point we're making, they get their numbers from their bookkeeper or accountant, usually way after the fact, and they don't understand the breakdown of those numbers, which is what we're saying. And then they get a story in their head to justify the numbers. And then it's just like, knock on wood, golly gee, maybe next year we'll do more revenue and it'll be better. And it doesn't work. So they get that story in their head that I need that staff, or I need that person to help me with this, or I need that. Just similar for anybody listening to this. If you break the numbers down properly, which is what we do with clients, it removes the story and just presents the facts. And you can make a logical, educated decision based on numbers and make it work. Just literally yesterday, I had a call with a client where new client, haven't been making money at all. And it's the same story you just explained, going through the numbers, looking at, wages are a problem, break out which of those wages are cost of goods, which are operating expenses, so call it administrative hours, to realize non-billable versus billable, and going, holy crap, they're spending so much money on non-billable hours. And then the owner wasn't paying themselves anything, like zero. And they were actually dipping into their retirement fund. And I finally just kind of had to say, like, you're literally, I want you to picture this. You're dipping into your retirement fund and giving that money to staff that you care more about than they care about you. And when you can't make that paycheck to them, they're going to quit. So you're not making a paycheck to yourself and giving your retirement money, because you're losing money, to that staff that doesn't care about you as much as you care about them. And I'm not saying don't be a human being, but does it make any sense to own a business and lose money, which means you dip into your assets, to pay staff you want to keep because maybe one day you might need them, or you just don't know any better? Like it's a real problem.
I had a client I was discussing this with when he started the program, and when we were talking, he's like, no, man, I've been to this number, we'll call it 10 employees in my business, and it was the worst I've ever been. It was the most stressed I've ever been. I never want to go back there, so don't tell me about hiring staff and everything else. So, okay, I said, okay, no problem. So what I did with every other client is the same thing you do, is we rip through the numbers. Now, it's amazing how much resistance comes in the beginning, because people go, no, I know my numbers, it's fine. But then you rip through the numbers and you actually break it out and you start looking at.
I know my numbers because my bookkeeper accountant know them.
Right. And they'll pass me the P&L and I still can't tell you what I did for revenue because I'm just guessing. But and by the way, that's most people. I'm not trying to make a dig at anyone.
Yeah.
So we took a look at his numbers, we pulled it apart, and I asked him a question that nobody's ever asked them before, but we ask this all the time is, well, what's your personal goal from this business? Like, how much do you actually want to make per year as an owner of the company and in net profit from the company? Well, he came up with some numbers. Then we were able to rip through his profit and loss. And I said, like, hey, dude, look, you were at 10 employees before. You hit this revenue number at that time and you were negative. But look at what we were able to restructure. We restructured his numbers and we could get him to all of his personal goals in the company with one more employee structured properly. So instead of throwing away all kinds of payroll, like to your point, on employees that aren't adding value to the company, we could figure out exactly where we had to hire, what we had to do to make the personal goals possible. So it's now suddenly the attitude goes from one of feeling hopeless to actually hopeful, because you can see the path and it's not that hard to get there once you know that. But if I'm overpaying my staff because I feel like I got to be a nice guy. Okay, here's what we're not saying. We're not saying employees are a bunch of parasites, get rid of them. That's not what we're saying. What we're saying is the right team of A players will do you a lot better than just a team of players, because you now know what they need to do and you can coach them properly, versus just throwing people at a problem and spending money hoping it will go away.
And and the only thing I would add to that is, if you keep losing money and you run out of money, then you can't pay any of them. Like, you have to let them all go. So were you actually being a good human being by paying more than you could afford? But by paying more staff than you could afford, are you being a good human being, or are you actually being self-destructive, because eventually it's going to lead to you got to get rid of all of them, which is actually worse? Yeah, it's a really good point. I agree with that. And there's
not only do I have to get rid of all of them, I now have to downsize my house because I've got collections coming after me, because I wasn't able to pay the high interest loans that I borrowed to keep everybody going. And now I go tell all my friends, yeah, business is hard.
Yeah. And then they don't get into business because they hear the story about the neighbor who's like, oh my God, it was so hard. Yeah, the ripple effect is awful. And then the other thing is that we should get into is, when we rearrange the financials, we like to split those operating expenses into variable and fixed. Now, everybody listening to that's going to go, oh yeah, variable and fixed, I get it. Variable, they change; fixed, they don't. No, we define that completely differently, and there is a very, very good reason for it. So we define variable as that expense dollar will change because revenue changed. So great example would be credit card payment processing fees, right? If your revenue goes up, you're going to pay more credit card payment processing fees. However, it's always going to be, give or take, 2.5-3% of your revenue. So a variable expense is always going to be roughly the same percentage of your revenue, just the dollars keep going up with revenue. In our definition, fixed is the dollar amount does not change because revenue changed. And probably the very best example, that'd be rent. You rent an office or a building or whatever it is. It's always going to be that price, whether your revenue goes up or down. So we call that fixed. So that's different. It's very different than it changes or doesn't change. Because a utility bill, most people would say, is a variable expense because it changes based on the weather. But it's always going to be pretty close to the same dollar amount. And if revenue doubles, the utility bill is not doubling with it, depending on the kind of business you're in.
I was going to say, unless you're manufacturing.
Exactly.
Unless,
for sure.
So like, that's where
then it goes variable. Exactly. Yeah. So,
right.
But we do that for a few reasons. One being, like, we got a great tool for profit sharing or bonusing. Like, people are, a really common question we get is, what I want to pay bonuses. What can I afford? We have a tool that allows you to like instantly know how much and know how to split it amongst staff. But we need to leverage knowing your fixed versus variable percentage. If we know your fixed percentage, and we won't get into all the details on this because it can get complicated, but the tool handles all of it. We know to the penny what you can afford on bonuses that if you don't, because you should only pay bonuses if you exceed your target. So it tells you what portion of the amount you exceeded your target, it tells you what portion of that you can afford to pay on bonuses that won't affect your profit, because so many companies agree to a bonus without really understanding how much they can afford. And then at the end of the year, they're super happy they paid the bonuses, the staff are happy, and they end up making less money or even the same amount of money as they would have made without paying the bonuses or exceeding. So they're like, what happened? So calculating that is super important, and splitting fixed and variable the way we do is what allows us to calculate that properly and never make a mistake.
Well, it's also like why you partner with a good accountant, because a good accountant, if you're making profit and you're going to pay bonuses, will tell you the best way to pay those bonuses tax-wise. But on the reality of variable versus fixed, there's some industries that are out there that the vast majority of their expenses are variable. That means if they double, triple, quadruple their revenue, those expenses just chase them, and it becomes harder to generate a net profit because you're always chasing down those expenses. There's other businesses where you may have an equal flip between variable and fixed, but the nice thing about that is that if I were to hit a certain level of revenue, my fixed don't change. I simply make more profit. And there's other businesses that are a lot of fixed expenses and low variable. The challenge with those businesses is if the market dips down,
Big trouble.
I no longer have the margin to cover my fixed.
Yeah.
So like someone asked me years ago, hey, Dennis, if you could buy any business, what would you buy? And they were looking for a specific example of the type. And I went, well, I want to buy a business that's really high variable in the beginning and all fixed at the end. They didn't understand what I was talking about, but I'm like, that for me would be the perfect structure, because in the beginning, I can mitigate my risk on low revenue months by not having those expenses, because I'm going to go through a lot while I'm trying to stabilize.
Yeah.
Whereas if I lock into a lot of fixed expenses in the beginning and I'm trying to ride that, I could be screwed really quick if I don't have the margin to cover the fixed. So even understanding something as simple as where does my variable sit in my business versus my fixed, you will not find on a standard profit and loss, because on a standard profit and loss, to Greg's point, everything is just in accounts payable. How am I supposed to make those decisions?
Yeah, exactly. And I mean, there are a number of reasons that the fixed variable helps. We just talked about one. One of my favorite by far is, and we do this with our clients, when they really start doing well, like profit, then it becomes like I had one client call me on a Saturday of all times, and he's like, I got a problem. He's panicked. I'm like, what's the problem? He's like, I got like $650,000 sitting in my bank account. I'm like, well, here, let me get the tears out and cry. Okay, that's horrible. He's like, what do I do with the money? I'm like, that's a great question. Well, because of the way we lay financials out, we were able to very quickly calculate if he buys a failing business in his industry, brings it under his company and turns it around quickly. We were able to very quickly and easily do, like literally in less than an hour. Wow, it was 30 minutes. In 30 minutes, we were able to do the math to say, if you buy a business that does, I think we used an example of if you buy a business doing 500 grand in revenue a year, so a smaller company in his industry that's failing, buy it super cheap, hold it under his company. We were able to calculate very quickly that by doing that, on that revenue, if he changes to his margins, which we know because the way we lay the P&L out, so apply his margins to that company's revenue, apply his variable expenses to that company's revenue, what's left? And we were able to calculate that super quick because there's no fixed expenses that are going to apply and the profit comes in. So super profitable. Then we did that as a percentage of the investment to buy the company, which by the way, you can buy that company super cheap because they're not doing well. And that return was insane. We're talking like 60% return on investment compared to him getting advice from friends saying, put it in the stock market because you can get ABC, which, is going to be somewhere between losing money and maybe 15 if you're really good. But who invests in the stock market that hits a slam dunk every time? Almost
Nancy
nobody.
Pelosi. She's the best stock trader in the world.
There's even an app, apparently.
Yep.
You should
Policy tracker. You can find it.
Right. Spot on.
But
So,
the
okay,
difference
so
is-
that aside, because that's so true, but we're able to calculate him investing in himself buying a company is 3, 4, 5 times the ROI. But if we don't lay out the financials properly to start with his company, as you and I were talking about, we can't do those calculations. And in that case, he may have just gone and invested the money in the stock market, which I would argue he wouldn't have that money in his bank account because he would not have been able to make great decisions to make that money. If his P&L was laid out the old way, he wouldn't have made that much profit, wouldn't have that money. And then if it was laid out the old way, he would have gone and invested in the stock market. So just the compound there of how much more successful he can be, it's very quick, right? I mean, you and I, we can look at that and we can train a client to look at that and make decisions in minutes because it's right there. It jumps off the page. It's not difficult.
Well, and what I find very interesting is that, and I think you would agree with this, we have got clients that come to us with a vast array of business experience. And I've had clients who've come to me with their masters in business and all of this stuff too. And we break down how we look at the financials, and their comment back is, I never learned this in school.
Yeah.
Because most people with the masters in business are trained to be middle managers for major corporations. They're not designed, the education is not designed to teach you how to operate effectively as a small business. Now, there's a bunch of reasons why, and I actually believe it's done on purpose, right?
Yeah.
If you can go to the bank and borrow money, they get access to your assets, it's leverage, it's capital. They get access to all of that stuff. The government really doesn't have a lot of interest in helping you out either because their goal is something completely different than yours. The system isn't set up for small businesses to win because major corporations want to keep everybody under their wing. They don't want competition.
Yeah.
So when people actually understand how simple the numbers in a business are, and okay, I should clarify, they're very simple when broken out properly. Broken out improperly, you're going to run down the wrong path all day long. So it's imperative that you get it correct. But once you have it correct, you have a nuclear weapon where everybody else is running around with pellet guns. Like you're massively destructive in a good way because you know what you have to do when you have to do it, and it's not complicated.
Yeah.
You probably have had this experience too, where you've had clients who've worked with multiple business coaches and stuff in the past. How many of those business coaches have ever gone through the numbers?
None.
Right.
Not like
I've
we
got
do.
the same experience.
Not like we do. No.
Or they'll look at the profit and loss quick and they'll say, yep, everything looks good.
Yeah.
Let's move on. And these same clients who tell me, well, all I want to do is systemize. All I want to do is buy my time, get my time back. I want more freedom, are all a little bit upset.
Revenue.
Yeah, they're a little bit upset when we start diving into the numbers first. And then within 30, 60, 90 days, depending on how complicated the business is, they've got a clear understanding of the numbers. Suddenly everything in their brain just clicks because now they know how to get their freedom back, their time back, what to systemize, how to systemize, who to hire, why to hire, and the whole system becomes a lot easier. But everybody misses that foundational component of how to do the numbers properly. So they're busy watching Facebook reels of people who got lucky and saying, well, just double your prices, triple your prices, just go charge more for what you do. Well, okay, you can. But what if the change you have to make is $50 per transaction, not $500 per transaction?
Yeah.
Then you hit all your goals. Well, now you've got a massive market advantage. So like knowing them, easily breaking them out to understand them from an operations perspective will change your life versus simply spending all of your time trusting your P&L and your tax numbers.
For sure. I think in closing, I would say, I love that, what you just said. And all I would add to that is, I think too many business owners in their mind, back to the math thing, like you said, hey, a lot of people aren't good at math. They just say, well, I'm going to trust my accountant, bookkeeper, controller, CFO, whatever they're trusting for numbers. I'm going to trust them because they know the numbers. And they do. But from our point is from a tax perspective, which doesn't make them good at rearranging the numbers to make good business decisions. That's on the operator, the CEO, the COO, the president, the manager, the director, the owner, the boss, whatever. And that's what we're saying. Like, let's rearrange them so you can know them. Well, actually, you and I would both say this. You need to know your numbers better than your accountant and bookkeeper. Like,
you do.
As a parent, you want to know your kid's report card better than the teachers do.
Well, there's also another reason for it. I know in Canada specifically here, when you sign on with an accountant, you sign two legal documents. One document is the right for representation, meaning you give them the full power to talk as you for you in any tax-related conversation. Second document you sign is a full liability waiver.
Right.
meaning they take zero liability for anything they say or do while working on your behalf on the tax side of things. So if you're not fully aware of your numbers, when an auditor comes calling, when something happens or something doesn't go right, you're in no position to defend yourself.
Yeah.
And honestly, when you break out operational numbers and you understand where it goes, self-defense is super easy because you're not trying to hide anything. You're not taking advantage of something you shouldn't. You know exactly where it goes. You know exactly why it goes there. And you're better equipped to make better business decisions that last long-term and put you in that really rare percentage of businesses that win.
Thanks for listening to the More Profit, Less Stress podcast. If you liked what you heard, be sure to subscribe or follow on your favorite podcast platform and leave a comment or review if you're feeling generous. To learn more about us and what we do, check out our website. Until next time, take care.